All right, guys, so here is the example number 1 for the ICT silver bullet. You can see that over here, we do not have a clear liquidity sweep anywhere, and the time is 9:55, right? So we're gonna wait for this, for the price to either take out the buy side or the sell side. So you can see price took out the sell side here. So now here's the thing. Price can take out liquidity even after 10 a.m. Okay, there is no like rule that the liquidity sweep must happen before 10. Okay, the thing is your entry must only be after 10. So it has taken out the the sell side. Let's go back to 1 minute and look for a clear market structure shift. And as you can see right here, what we do have is a lower low, lower high, lower low, right? And then over here, we have a shift in market structure. Now, this I consider internal market structure, and this right here would be my external market structure, okay? So let's say if price takes out this significant high over here, then the chances of that trade playing out is going to be decreased. I want these tiny structures to break, okay? I do not want this like significant structure to break, because if that breaks, in my eyes, that is a liquidity sweep, especially when we're looking at 1 minute time frame. So now what we do have is a fair value gap right here. Okay, and my entry would go here. So let's say we put our stop at 5 handles right here, and we go for 5 handles take profit, right? And the time is 10:36, and your entry must not be later than 10:50 a.m. Okay, so your window, the trading period is 10 a.m. Oops, 10 a.m. Oh my God, 10:50 a.m. All right, so your entry must happen during this time window, okay? And you must close your trade before 11. Okay, so we have our entry, and let's see how this plays out. We go back in a little drawdown here, and then look at that. We push back up right away. So that take profit was it. However, if you held your trade till this level, you can see we would have gotten 1-to-2 risk to reward trade. So it needs some sort of practicing, and then you can master this strategy. Remember, this is very important part here. When a significant structure, something like that, if it breaks and then it comes back to your entry, that is a low probability setup. So let's say you have a liquidity sweep, right? This is a liquidity sweep. I want this tiny structure, something like that, okay? Not something like this where you have like 3, 4, or let me give you another example. This right here, if that breaks, right, that is invalid. I want to see a break of structure, something like, this over here, or maybe you see lower low, lower high, lower low, something like that. That is prime market structure shift. Or this is the best example right here, okay? You see this tiny structure here, lower low, lower high, lower low. I do not want to see this structure break and then I wait for my entry. That is invalid. You can see that we broke the structure and we filled in this fair value gap, and then we went down. Because this is liquidity, guys. A lot of people, what they do is they consider this as the low and they consider this as, market structure shift. No, that is a liquidity sweep. Okay, just open your eyes, bro. So right here we hit 1-to-2. Let me give you guys another example.